All right, Corp Devers, Josh Kodelinky here. I lead our healthcare finance corp dev search vertical. I also helped co-found our corporate development practice a number of years ago. Thanks for joining. This is February 2025. We released several weeks ago our annual corporate development compensation study. It's got a ton of insightful data. We've got the entire corporate development leadership team here today to talk about their specific industry verticals. You can download our corporate development compensation study on charlesaris.com. That's our company's website. For those of you that have not signed up in our newsletter, the handle for that will be in the signature and the comments for this particular post. I would encourage you to do that. Every month you'll get content from us in terms of industry insights, functional insights, what we're seeing in terms of compensation, what we're seeing in terms of sign-ons, all that stuff. And so we release 2 offer reports every year, one in July and one in January. The more encompassing one, which is the one we're talking about today, is released in January. That is from the entire 12 months of 2024, all the offers that we help clients extend. We placed 92 individuals in 2024, variety of levels. Again, we do full stack, but for the most part, the vice president, head of corporate development is our most frequently placed profile. We also do directors and chiefs and even some associate analyst stuff as well. We will get to the insights from the 2025 corporate development compensation report in a second. First, let's meet the team. We have Diane, Rebecca, Derek, and Ryan. We'll let them introduce themselves and their practice here in a second, but essentially the folks that helped put together all the data that you guys got to see starting last month are here. I'm going to let them go around the horn. Rebecca, why don't we start with you? Give Corp Dev Nation a quick intro.
Absolutely. Hi, everyone. I'm Rebecca Conway. I lead our healthcare and life sciences corporate development practice, and I'm excited to be here.
Diane in our Nashville office.
Hello. So excited. I am Diane DeRosa Fedor, and I lead our TMT, our technology practice here at Charles Aris.
Ryan Morgan, one office over.
Good afternoon. I am Ryan Morgan. I lead our diversified industrials finance and corporate development.
Derek Gracie, one floor up.
Yeah, hey everyone. I am Derek Gracie, and I lead our services industry vertical within finance and corporate development, largely centered around business, consumer, and professional services.
All right, team, thank you for the introductions. We will get back to the industry heads in just a second. Before we do that, I want to dive into covering some of the insights that we have across all industries, all company sizes, for the entire function of the course of 2024, as well as maybe even comparing some trends we've seen last year compared to 2023. This slide right here, slide 5, again, this is industry, company size, ownership, status, agnostic. This is effectively all roles with these titles that we placed in 2024. Again, 92 placements in totality. Directionally, what I'd say in terms of compensation insight broadly for the function across all industries, obviously there's some nuance, we'll get to that in a second, would be effective. What we've seen is we've seen like the 50 percentile, the middle of the pack offers have all jumped up from the year before. All 5 of them. The directors, the VPs, again, we've done the most of those, the chiefs, the associates, the managers, all of the midpoints compensation-wise have moved up. What has not changed, surprisingly, is the 75th percentile. So again, the median in the middle of the pack, that compensation has gone up based on 2024 when you compare it to 24. The top end has not changed, nor has the bottom end. So kind of the 25th percentile, there's a little bit of movement in some of these, for example, like director level comp at the 25th percentile went up a little bit compared to the year before, but that would be the only one. And so again, kind of the state of the union in terms of the function for the entire all the placements we've helped make would be the middle of the pack offers have all increased, not the ends of the barbell, not the top of the low end. All right, so in terms of maybe what we've seen again across all levels, all industries, all company sizes, if you look at our kind of our fast facts page here, I would say 3 things stand out. If you look at the percentage of corporate development offers that include a severance package, that has doubled from the year before. So 11%. Again, we don't see a lot, again, typically chiefs, that is usually part of the conversation. We do a lot of VP at lower mid market businesses where severance is not part of the discussion, but it has certainly gone up. And so that's something to be aware of. Not only in corporate development, we get a lot of data too now, obviously with the finance and corporate development vertical. We also do FP&A, CFO, and controller searches. My general kind of thoughts on this would be that severance is something that is being asked for more frequently by all candidates that are gainfully employed and have the leverage to ask for it across all functions in private equity-backed businesses. And so I would expect actually, whether you're a client, whether you're a candidate, this is something to be aware of. It's being asked for a lot more, and it's being given a lot more. So something to be aware there on the severance package. The second thing I would say would be, and I think Derek's going to talk about this in his sector, but the percentage of packages that we see extended to candidates that include a deal bonus. Again, up 10% from the year before, not insignificant. You see the number right here. So about a third of the placements we made in 2024 had as part of their compensation some kind of deal bonus. Again, we've got a lot of data on this, whether you're a client, whether you're a candidate. Generally speaking, and again, we've got some white papers on this. There is some industry nuance, but for the most part, in terms of deal bonuses or just bonuses in general, we tend to see kind of one of three: straight annual bonus, which again is still the norm. That is still statistically speaking the highest percentage. Just straight annual bonus usually is tied to some combination of company and individual performance per the manager's discretion. So that is still the bulk of it. Number two would be a straight deal bonus, which is effectively a type of commission. Sometimes that's a percentage of EBITDA acquired. Sometimes that's a flat amount. Again, a lot of nuance there and a lot of flexibility with clients to structure those different ways for candidates depending on what they want. And then number three, which is probably that would be largely representing this number here this year, the 31% would be some type of hybrid. So some type of hybrid annual and deal bonus. And so that would be the percentage that it's highest on the ride. We just still don't see, I've done one search this year, I can think, that was a straight deal bonus. It does not come up a lot. Probably happens more in the lower mid market. And certainly sourcing will typically be part of that competency for that search as well. But for the most part, straight annual is number one, some hybrid annual and deal bonus would be number two, and then number three, distant third, would be just straight deal percentage. And then the third insight, I would say, this would be more maybe for clients, our average cycle time increased 2 days. You can see our average median corporate development search cycle time in days across all levels on industries in 2024 was 65. That's up 2 days from 2023 when it was 63. So again, kind of our philosophy on search execution for clients would be 2 days of deliverables and research ready, weeks to start have you interview candidates. Typically, if we hit step 1 and 2, we close these searches in 2 months, which of course 65 days I would still say is pretty close to that. So some level nuance there, some client nuance there, some industry nuance there. But, at the end of the day, we still are moving searches pretty quickly. One of the blessings of working in corporate development is most corporate development professionals tend to be pretty decisive. And so between the hiring authorities and the candidates and us, all parties tend to want to move very quickly. So that has not changed significantly, but it has ticked up a bit. It's pretty close to that. All right, folks, we'll start first with healthcare life sciences. I'm going to kick it over to Rebecca Conway, who leads the healthcare corporate dev vertical for us, to talk about what she saw, completing about 24 searches, it looks like, in 2024, as well as maybe what she's seeing already on the ground floor in 2025. Rebecca?
Awesome. Thanks, Josh. What I would say the theme for this past year is that we're moving in the right direction. First half of 2024 was pretty quiet on the healthcare side, but as we were moving into Q3, we started to see a pretty significant uptick in the searches that were coming in. So we're excited about that. And that momentum seems to be continuing for 2025. All conversations and signs that I have seen indicate that 2025 is going to be more active in the healthcare life sciences space for corporate development. So we're excited for what's ahead. I'd say some of the biggest things that we would see based off of the report, one thing that jumped out at me is that we were seeing a lot more senior level roles, which was exciting. We had a lot of opportunities for folks that could come in and help build out corporate development for the first time for some of our platforms, and take leadership opportunities as well at that SVP and Chief Development Officer level. So excited about those types of opportunities. If you look farther, another thing that stuck out to me was from a sign-on and just the activity there. If you looked at last year in 2024, we actually had 11 opportunities that came with sign-ons. This year, we only had 3, which was really interesting in the market. So, there were a lot more candidates that were available this past year, just understanding some of the movement that had happened in the year before, which predicated not needing to have sign-ons, but thought that was really interesting. But looking forward to seeing what's next.
And as a guy, I used to do some healthcare life sciences corp dev recruiting myself. Maybe talk to everybody out there in terms of subsectors within healthcare and life sciences? Like what, are we still doing a lot in provider? Are we doing a lot of other things? What does it look like in terms of subsectors of healthcare?
Yeah, provider still seems to be the meat and potatoes that we had in our business in the last year, but subsectors within provider have shifted. I think before you saw a lot in dental and vet, those were much quieter this year, but what we did see an uptick on was in the behavioral health space, home health, med spa areas. Those I'd say would be the big three within provider. It was also exciting to see movement in the healthcare technology space. And we're seeing more on the life science services side of the house as well. So liking the diversity that we're seeing coming in from clients these days.
You mentioned provider. We do a ton of work in provider. We have for a number of years. Obviously, within providers, a lot of different sub industries. Like, just curious how the sourcing competency has played out in 2024 in the searches you've worked on with the clients. Like, is it more nuanced, or is it just give me somebody that's a cold calling sourcing expert and we'll figure out the industry later? Just curious there.
Yeah, great question, Josh. I think from what we've been seeing with the market broadly, it's allowed our clients to be much more specific on who they want in the seat. And so they're very particular on the subsector and having that prior knowledge of the space, and not just knowledge of the space, but the relationships in the space. And so when we are looking for folks and their sourcing capabilities, yes, we want the experience with sourcing, but even going a level deeper, we want that proprietary sourcing that they can actually go out. They're having those coffee chats, they're meeting folks and building relationships, and ideally even coming to the table with those relationships already in place. So as folks are thinking about that potential next step in their career at this level, I think having that proprietary sourcing mastery under your belt is something to be thinking about for sure.
So, like, of the roughly 15 director and up searches that you did last year, I don't know if all of those are provider, but like, what percentage of the provider searches were you asked to find specifically somebody out of the same industry, like a derm platform that wanted somebody with derm? Like, roughly what percentage?
I'd say 85%.
Yeah, that's interesting. Good.
Yeah.
Insightful. So, moving over to all things technology and corp dev recruiting, the queen, Diane DeRosa Fedor, my compatriot out in Nashville. Diane, talk us through what you saw in 2024 on the corp dev tech front.
Thank you, Joshua. Very similar to Rebecca in terms of a slow start. I don't think anybody on this line is going to be shocked that tech had a slow beginning in 2024. We really saw an increase in IT services. I think anybody I spoke with in 2024 heard me say that repeatedly. SaaS and software slowed down. IT services truly picked up. We are already seeing an increase in 2025 in the SaaS and software developments. We are truly seeing kind of at the end of 2024, we had a 30% increase in PE-backed acquisitions in technology, quite a tick up from where we saw kind of Q1 and Q2. So we are seeing a resurgence of tech in 25. We continue to hear kind of the AI boom in technology, and we suspect that that will continue to push the IT services / kind of that SaaS software to the forefront of our tech offers. If you move into what we were seeing, Josh, tech continues to be predominantly remote. We are seeing a shift though from our candidate side of the house, asking to be, as somebody who sits in their guest room all day, I would give anything to be in an office, and we're finding that our candidates are wanting that balance as well. So unlike Rebecca, we really saw an insurgence of kind of director manager roles and not many SVP or CDOs within the technology sector. We really found that people were looking for leaders who could wear multiple hats, but because the deals weren't flowing like they had in 22 and 23, we didn't need a need for an SVP or a chief development officer in the tech space. Now, I will say we are 3 days into February, and we've already seen quite an increase of SVP roles in the technology sector. So, for 2025, we continue to think the AI boom, a software boom, and we believe IT services will continue to reign very, very high in the technology sector.
And are we saying that tech is back? Is that what we're saying in 2025?
Make it a t-shirt, Josh.
Anything geographically? Because when I think of tech, I think more West Coast stuff. Obviously, most of our clients are on the East Coast, but anything just geographically to be aware of in the technology sector, at least as far as like the data that we're looking at right now?
Yeah, Josh, that's a great call out and a great question in terms of the remote piece of it. Yes, our clients tend to be more West Coast heavy, but because our candidates continue to remain remote and truly tech spans, geography spans the globe, really, we are finding that our bases and bonuses really don't differ based on where you live. And so it truly is the number one question I get asked in terms of, hey, I live somewhere that may be more or less expensive. How does that affect my base and bonus? And it truly doesn't. So an interesting kind of caveat in the tech world that we are seeing in terms of geographical based bonus comparisons. Biggest call out within the technology sector is going to be the VP head of corporate development continues to be an individual contributor in tech. We rarely see a team within the technology sector at that level. And again, continuing to push on that, we haven't had a chief development officer or an SVP the way that we had in 2022. And so excited for that resurgence in 25.
And then flipping over to Ryan Morgan, who leads our industrials, finance, and corporate development search vertical. Ryan, let me give the microphone to talk about what you saw in 2024 out of the industrials practice.
Josh, much appreciated. And, the industrial space for 2024, kind of common theme from my other two colleagues, slower beginning part of the year, did start to ratchet up, toward end of third quarter, beginning of fourth. But, candidly was probably our slowest year just in terms of activity at Charles Aris. If you look at the subsectors that we cover, industrials is our broadest practice, going from aerospace and defense, chemicals, packaging, broader industrial manufacturing. But some of the common themes that we heard and we saw are the energy sector, the infrastructure, transportation, and logistics. Those are the spaces that are getting a lot of the more investments in the market today. And we fully expect that to be continuing the trend into 2025. Couple of things that I would point out is, even though we did less, corporate development roles in industrials, we had a high success rate. And we only had one declined offer out of all the offers that we extended, which candidly was a bright spot for us and team. The second is, there is more of a pullback in my world to an in-office setting. Even though there were 3 roles that we did that were remote, the overwhelming majority is, hey, we want our team to be back in seat. We're building an office. We've got a center of influence in a particular location. So what that tells us is, hey, we've got to be very mindful, very thoughtful of winning in our current market. Wherever that current market is, we've got to make sure that we're identifying the right individuals in that space so we can be quick, efficient, and find the right level of talent there. That helps, with us from a market mapping standpoint. We make it a point to know every single leader, whether it's within aerospace and defense, energy, infrastructure, transportation, etc., that are in tight geographic markets, so we can meet the needs of where we're seeing our client base moving, from 2024 and beyond.
So you guys in industrials have a pretty good mix of public, private, PE portfolio. Just curious, like for people in this space, one of the questions I would imagine they'll have is on the PE portfolio side, where are you seeing the most activity? Is it lower mid-market? Was it mid-market, upper mid-market? What's your thoughts in terms of PE firm size?
It was a good blend. I think lower middle market slower in the space. They're not quite at a level to bring in a head of corp dev, as you see by the roles that we were placing from that SVP to director level. The middle market is still going to dominate the world, the work that we do in this space. Hopefully that helps.
All right, and then to kick it over to Derek Gracie, who leads our business and consumer services vertical, without question, the hottest space in the economy right now. You've got four faces all red with envy, Derek. Congrats on all the success you've had this year. A ton of searches with a ton of clients. Let me kick it over to you, man, and walk us through maybe the State of the Union 2024 of the business and consumer services vertical.
Thanks, Josh. Yeah, as you mentioned, 2024 was another hot year in the services sector. Folks that have been kind of following along for a while are probably not surprised to hear or see that, but we're fortunate that a lot of activity in this space has continued into 2024 through 2024, and even so far in 2025, we're seeing a really active market in this space as well. So it may not be quite as insanely active as last year, and I'm sure that some things will normalize, but we'll see some new verticals come up to the top, but there's still going to be some familiar friends from an industry vertical as we get into 2025 as well.
And then maybe walk everybody through, how do you structure your practice in terms of who does what, where do you, like, what is business and consumer services as far as the—
Yeah, that's a great question, Josh. So we kind of talk about it as the services vertical more broadly. Most of what we've done at Charles Aris over the past several years has really been focused in three verticals. I would say business and consumer services, professional services, and financial services are the kind of three big verticals within that. Really, my work is largely centered around business and consumers, and we have an individual on our team, Corby Brook, who is now leading our professional services, which includes financial services. So folks that have been following us for a while probably know that name. Corby's been with us for a number of years, and we're excited about her growth and development to really take over and lead the professional services bucket within this group.
And then as we transition to the actual data, a lot of offers, obviously your practice saw extended last year. Maybe talk us through any insights that you noticed after compiling all this data.
Yeah, a couple of things I'd call out here, and you can't see necessarily the sub verticals here within this, but we did see a lot of familiar verticals, things like HVAC, residential home services more broadly, and RIA, wealth management. Those sorts of things continue to be really hot last year. Those are industries we've seen in years previous as well. But we also saw some newer trends come into play. Specifically, we saw an uptick in things like foundation services, roofing, and restoration, accounting. Those are all verticals that PE firms have been active in for a few years, but were seemingly more active last year in 2024. Another thing I'd mention is around the leveling and the team piece here. You know, as you can see, the majority of the searches that we completed were at the the vice president or head of M&A level. A lot of those vice president roles are the head of position. But we also saw a healthy portion of junior to mid-level roles as well. It's pretty common in the services world to have a vice president as a solo team of one, just a head of and an analyst, kind of just a one-man band. So these junior searches to me really indicate an active M&A market within this space and the need for those senior leaders to actually have some support on their team because business is good.
So for that VP level role, and obviously the stuff Rebecca does, everybody has searches where we're looking for individuals that can source founder-led businesses. But in your world, it seems like it's a kind of the part of the par for the course. What percentage of like these VP level and up individuals, these placements that you made, was sourcing, origination, ability to go find the deal on your own, part of the competencies for the search?
Yeah, that's a great question. I would say 75% or more of these searches, the sourcing and business development is tied into that role. So we're typically looking for individuals who have done full life cycle and have owned that, or who the client, who the private equity firm and CEO believe could ramp up there, even if they've not fully owned that to date. So it's a big piece of this, going back to kind of that one-man band approach. You know, most of our clients are looking for someone who can do the whole spectrum. Only the ones that it's not part of, I would say, would be where the private equity firm or the CEO are playing a more active role in that. Maybe it's a CEO with a lot of industry connections and they've been in the space for a while, which is pretty common in our industry. They might be a little bit more of the front man on the deals, but may not have the execution background. And so a couple of these vice president roles would fall into that category, but the vast majority of them, the sourcing is a big component.
Derek, any call-outs just from the specific data from your sector in terms of sign-ons, remote work, cash, things you've noticed, things you've seen?
Yeah, a couple of things, Josh, I would highlight. One is company size tied to compensation. The second would be deal bonus, and the third would be sign-ons. So on the company size, we usually see a pretty direct correlation, or at least a pretty strong correlation between revenue and the cash compensation. And you'll see a few outliers this year on the report. So we saw a few much smaller platforms hiring more seasoned M&A leaders and thus paying them more than we would typically see for companies their size. To us, that indicates a more aggressive strategy, probably from the private equity firm, to really differentiate themselves in whatever platform they might be building, to do so more quickly by hiring a what we would consider a been there, done that seasoned leader, rather than someone who's stepping up into that for the first time. The second thing I would mention is the deal bonuses. I get asked a lot about deal bonuses from candidates in particular. And the short answer is they're not very common in the services world. As you can see here on this offer report, I think only three or so of these offers included a deal bonus component. So that trend continues. They're just not as abundant here as some other industry verticals. And then the last thing I would mention is around sign-on bonuses. So again, you'll see that fewer than half of the offers here did include a sign-on component, but those that did were pretty substantial. You'll see some pretty significant sign-on bonuses here, 80, 85, 100,000. Again, going back to my earlier point about private equity firms being aggressive to get the right talent, I think this is in line with that.
All right, Corp Dev Nation, our sincere hope is that this was a really insightful call for you as you think about your career and think about your compensation. Thank you to Rebecca in healthcare, Diane in tech, Ryan in industrials, Derek in services. Folks, if you want to get in touch with any of the individuals, if you're a candidate or even a prospective client, look them up on LinkedIn. It's on our company webpage, all their email information. If you want to get in touch with them to have maybe a resume on file as a candidate for any questions on specific search help, charlesaris.com is our company's website. Again, you can download the offer report that we reviewed on this podcast there if you'd like to. Otherwise, looking forward to, in March, resuming our Chief Development Officer interview series. We've got a fantastic lineup this year from all the different industries that we've mentioned, and look forward to bringing that to you next month. Appreciate the time. Have a great month. Thanks for listening. For more of the Charles Aris Podcast, you can subscribe on Spotify or Apple Podcasts, or head over to our YouTube page at youtube.com/Charles Aris Inc.